All right, we should be live on our global macro update. We did one yesterday night at around like 10:30, 11-ish, and it looked a little bit more bearish definitely yesterday. We'll look into that right in this video, but we're in a little bit of a place where we don't want to just call it a reversal just yet. We do have a trend line broken and a support held twice with a huge wick to the downside indicating buy pressure to bring it back up, but in my opinion, we do want to be a little bit cautious. So let's just talk about the S&P first for the day. Let's go back to the daily chart and we can see, if we just take out this trend line, huge wick to the downside, and it looks like we are above the open now, and we got around 3.5 hours until this candle closes. If it closes green, that is a huge wick to the downside, and that hammer candle is, in my opinion, really showing that there is a significant amount of buy pressure around the 29.60 mark. This was that key zone of support that we really wanted to see break in order for the sellers to start taking control and gaining some momentum in the market. If the buyers are able to hold the price there, this was that previous resistance, and if we draw a fib range from the high to the low, this was at 61.8% resistance, which is now looking like a new level of support. So with that wick to the downside, definitely signifying a lot of buyers. I would be, in my opinion, a little bit hesitant to be calling it a huge risk-off sentiment market where the environment is very heavy towards things like USD, JPY, and the currencies are looking to short crypto. That kind of environment I don't think is here yet, but we'll look at the different things that we're going to look at in order to validate that thesis a little bit more. So that's the S&P. I'll mainly keep it on the 4-hour. Let's just talk about the 4-hour a little bit. So we got our initial dump to the downside. We got our small little bull rally, huge bearish engulfing candle, and then what signified a potential reversal for me was the double bottom as well as this long wick to the downside and the huge recovery we had by the bulls. Now, we did make a lower low, and if this does make a lower high, obviously the momentum is still to the downside. You can't expect price to go from point A to point B without any sort of consolidation in between or any sort of market breadth, and I think that's what we're seeing right now. But in terms of market structure, let's just copy this. We see that the price is making a high, lower high, and we'll see what the market does right here. We do see some significant level of resistance right around here turn into support, turn into some level of resistance right there. So we know that this is some level of sensitivity for the price, so we'll see how it reacts here. If it does hold and start moving back towards the downside, we've made a lower high and then a lower high again, so we are making lower highs and lower lows, indicating that the market structure is still to the downside. So we're still putting pressure on this overall support if the market structure is making lower lows and lower highs, because this is a low, this is a lower low. If we are able to hold the previous low right there, we could see a little bottoming pattern, but if the momentum continues, obviously that's going to put pressure on the buyers. So we'll see how it goes right now. We made a strong bullish candle with it closing really at the top of the range, which is signifying a lot of pressure, not only pushing it, but maintaining its pressure, keeping it right at the top of the range of the candle. So we'll see how this candle goes. Obviously, we have a decent amount. We got around 3.5 hours until this candle closes, but the previous candle closed pretty bullish. So we'll see how that goes. The Russell 2000 is bouncing pretty hard as well. Let's go take it back to the daily chart. We see the big wick to the downside, really holding that key level of support that we drew in really well. Definitely not good for the buyers at this point, sellers at this point if you are looking for shorts within the equities market. I currently am not. This support range is in confluence with this ascending support zone, and it's not like that's going to be the main level, but I really wanted to see that break before my view of the market changes in terms of sentiment and a risk off or risk on environment. And as long as this holds, it's going to be in a risk on environment, same as the S&P 500. So that's a huge bullish candle right here, and we do have a little bit of time before it closes. This did make that previous high. So if we get our range right here, it did make that previous high. So this is going to be the new level of resistance that it needs to pass right around here. Made a series of lower lows, so it's expanding in volatility, makes sense. And currently we are still holding that zone. If we just go to the 6 hour, we see wicks within the second touch and wicks within the third touch. Huge wicks to the downside, lots of hammer candles there indicating potential reversals with some bullish engulfing soon after. Really strong rebound from the buyers at that zone anyways. All right, so that is the small caps, because the Russell 2000 is going to be looking at the small caps. S&P is going to be looking at the large caps, 500 largest companies. Yes, it is skewed heavily to kind of the at-home NASDAQ type companies that are taking a majority of the share. But the S&P is the S&P. Really good overall analysis of the global equity markets. And this is the global equity markets. This is the ticker VT, Vanguard World Equity Index Fund, basically. And we can see it is rebounding pretty well off some level of support, not extremely significant. The main level on this ticker is around $70. That's going to be the main level of support that we saw was a key level of resistance within the consolidation to form that next leg up. So overall, we don't see that much sell pressure on the Monday morning. We actually seen quite a bit of buyers stepping up, bringing the price back up to potentially a near high, or at least not really letting it go below key levels of supports on a larger time frame. Just quick looking at the VIX, TVIX, VIXY, whatever you're looking at, just in terms of volatility. We got to move to the downside, but normally, you know, when we see these huge pumps like we can see here, it takes some consolidation while we're climbing up. So I'm not going to assume that this is the end of it. We got a huge amount of buy volume coming in, less sell pressure than buy pressure. Not a significant amount more, but we are just holding a nice level of support. I can kind of see one kind of around here. As we can see, previous resistance, support, 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 and then it turns into a resistance. So overall, the VIX is holding. So investors are putting some level of capital in there in case of a huge move to the downside, because usually there's higher volatility to the downside than to the upside. Almost all cases, really. So that's going to be the overall analysis of the global equity markets. So let's now go to a quick look at oil. Oil is bouncing off for support here. The WTI at around 34 and Brent at 37. We do have a resistance at 40 on Brent and 37 on WTI. So we'll see how that goes. We do see a lot of buy volume coming into the market. We're just range bound. We do see that theoretically you could have a ascending neckline, head and shoulders on both potential tops. So this retest and validation of a new resistance is going to be a pretty key zone that we will need to make sure holds if our bias of the risk on sentiment is going to continue. If it breaks the resistance like we can see in equities markets, there is probably going to be a continuation of the risk on sentiment where overall, risk on investments, assets, instruments are going to be moving towards the upside. And we can capitalize on that as well. So quick look at the bonds. They are holding, so they did look worse last night. We're just looking at the 1 day for the 30-year and 10-year yields. Overall, looks like it's holding. It did break below the zone, but the main area that we're looking at is the zone of confluence, not just a single point on a chart. If we hold the low that we're currently at, I think we could start to continue back up, although we did break both horizontal zones and ascending zones kind of on the chart here. But, TA is not absolutely perfect. We're working with zones, not exact price points, so I'm going to give it some leeway. Overall, if the equities markets start to rise, these will start to rise as well because people are going to be looking to go in equities and not as much bonds. But if there's a huge sell-off, the yields on the bonds are going to go down because there's less incentive needed in order for people to actually invest, trade, and have that yield. So that's going to be the overall analysis. Oil, bonds, and quick look at equities. Gold, massive sell pressure and huge buy pressure back up. Just lots of volatility, nothing really to trade in my personal opinion. Got another failure at the top there. That definitely should have signified something with the huge wick to the upside. And then we just got some consolidation. And then once we got a little bit of the sell-off within the equities, gold started to take a tumble as well. And then silver is just in a no trade range in my personal opinion. Nothing really to do on silver. Gold and silver ratio is just consolidating a little bit better for gold because it does tend to hold its value at a better rate than silver. But overall, I would be a little bit hesitant on saying that it's a huge risk-off sentiment just because we did hold this very strongly. I know the video we made prior last night indicated that we could see a pretty significant risk-off week if we break this support. Trading is not, I guarantee you A, B, and C will happen. It is reactionary. It's if this support will break, there's a high probability of B and C happening. If D happens, E and F will likely happen, and that's the way you got to go about trading, in my opinion. I'm not trying to project my demands on the market. I'm just letting the market do its thing, because if you try to, bully the market and be smarter than it, you're definitely going to get slapped in the face. The market is all-knowing. It's a teacher, and you just got to ride the wave when it provides it, basically. That's the way I like to trade the market. So that is overall the analysis I have within equities, within metals, bonds, oil. Looking at risk-on, risk-off sentiment is really good to start off any day, in my opinion. All right, so we normally don't really look at FX, but quick idea. We got two ways we're going to go about playing this. The first way is we're going to be looking at a risk-on sentiment. So this is in the example in which equities bounce significantly, yields go down, and people want risk. And in a risk-on sentiment, equities go up, and you're looking at things like Australian dollar, New Zealand dollar going up because these are risk-on currencies. And then you're looking to short things like JPY and US dollars. So, and CHF as well, but CHF has been relatively strong compared to the two. So here's just some ideas that we have been eyeing up here in the FX markets. Getting more interested in it just because there's so much going on, and this is an extreme opportunity, basically. So anyways, quick discussion. So what do we see here? So I'm mainly pairing New Zealand dollar and Australian dollar, which are risk-on currencies, to things like the US dollar and the Swiss franc, which are risk-off currencies. So we can see right here, risk-on US dollar, risk-off strong US dollar. Remember back in March, we had that huge liquidation event that occurred where everyone stormed into mainly US dollar. JPY did pretty well as well, but overall, everyone rushed into the US dollar. If we do get another sell-off, most likely people will rush back into the US dollar. There's a high probability chance of that. So these types of pairs will be looking really good for shorts. But if the buyers and the overall sentiment is looking positive and equities, continue to rise, hold that nice level of support, I think these are going to be really good continuation patterns to the upside, because if we're just going to look up one, let's just look up Australian dollar versus US dollar. We can see that it's been in a strong continuation to the upside. Let's just go to the 4 hour. Since that massive sell-off that we got right here back in early March, it's just been steaming up, and we got a nice pullback. Overall, it's looking very strong for the Australian dollar if the momentum for the bulls continue. If the buyers continue to show up, and if this overall recovery continues, I think that this continuation pattern could be pretty good. We see that huge sell-off, and now we're getting a break of the previous resistance, looking like it could be acting as a new level of support here. And this is a classic descending triangle pattern where you get a sell-off. This is an exhaustive move for the market, and we're looking for that next impulsive continuation push to the upside with the overall sentiment in line, using FA and TA, bringing it all together to have high probability situations occur in our favor. So that's a trade opportunity that I'm looking at. I haven't acted on it just yet. I think that if we're just looking at Aussie USD, The 0.619 is a pretty key level within the chart that I would like to see pass in order for me to validate that this is a risk on environment. Also, looking at the equities market, I think, is a pretty good way to gauge the overall sentiment as well. So that's going to be my view in the FX markets. And if it's the other way, we do have some other pairs that we're looking at in order to capture some risk off sentiment. The Canadian dollar has been extremely weak. Normally, Canadian dollar is pretty well in positive correlation within the Australian dollar. Let's just quickly look at the Canadian dollar's positive correlation. I just have it right here. So in terms of the Australian dollar, in a 180-day correlation, it's positively correlated 0.91, very positively correlated in a 180-day period. But in terms of the relative strength that the Canadian dollar has had compared to its partners Aussie and Kiwi, Canadian dollar has been relatively weak. So if you are looking at risk off sentiment trades, I think if you're looking at things that are really strong when there is fear, Swiss, Japanese yen, United States dollar is really good for longs, and then mainly Canadian dollar is a really good short because it hasn't been doing really well compared to a lot of the other currencies that have been absolutely mooning in these risk on environments like the Kiwi and the Aussie dollar. Personal belief. All right, gonna get a little bit of coffee and then I'll continue on with the analysis. All right, so we're gonna now go into crypto, and then we'll answer questions at the end of the video. And also, how do I know correlations? Obviously, I don't know if it off the top of my head. Really great correlation chart. This didn't work for a little bit. I think they were doing some updates. I don't exactly know. But if you're looking for correlations, this is, in my opinion, not the holy grail, but an extremely useful correlation index, matrix, whatever you want to call it, in order to understand correlations in a broader market. So you have 30-day, 60-day, 90-day, 120, and 180. Obviously, the longer time frames is more valid, and the shorter time frames may be more prevalent in the shorter time frame trades that you are looking at. But getting an understanding of the larger time frame correlations, in my opinion, is really great. Has things starting from overall indexes, Dow Jones, Russell 2000, you got treasuries, you got the Japanese Nikkei index, you have things like the Swiss franc, euro dollar, the euro, the USD, Japanese yen, and then you have stuff like Canadian dollar, British pound, I don't know what this is, US dollar index, which is just basically euro dollar. You got gold, silver, platinum, you got crude oil, you got gasoline, you got Brent crude, you got diesel, bunch of stuff. So if you'd like to have this, it's absolutely free. Just ask myself, Keith, in the Discord, and I'll be happy to share it with you. It doesn't have Bitcoin, unfortunately, but what we do have is another correlation chart that does offer a correlation to BTC against the S&P 500, and that's what we use for our correlations with BTC and other assets. We can see that we can use this for DXY, which is the US dollar index, mostly comprised of US dollar versus Euro, GBP, Yen, and other currencies. We got gold, S&P, and VIX. So mainly we're going to be looking at the dollar, S&P, and gold, most likely in order to understand Bitcoin overall correlations. But anyways, that's kind of a little bit side note. Let's now talk about Bitcoin, because we did have a huge recovery on the daily. Like I said before, I did want to see the daily close below the zone, and this is the reason why. We saw a massive recovery. Let's just get our nice little snip and take a picture of it right here. So the price did open right here, pushed all the way down, touched our higher low, which was a key level of support. First rejection, and then we have a type B candle closure where just the candle closes at the zone with lots of wicks to the downside, indicating lots of buy pressure, bringing the price right back up above our demand zone. And then we see another type B as well as a type A candle closure at the third touch. So now we got 1, 2, and then 3 rejections indicating a valid zone. 2 is a potentially valid zone. 3 rejections with a type B or type A is now a valid zone that we can use, which is an ascending support. And now we get our 4th touch, which is a type A, really signifying this ascending support, showing really strong, well-respected validity for our structure. The top is definitely a little bit noisy. We do see a huge move that was above the 10.4-ish K zone, massive rejection back down, and then we see a wick that we did get rejected right back down, and then when we tried to make our 3rd attempt, we got rejected back down. So we're in a bit of a squeeze here. We know that there's a tremendous amount of sell pressure above the 10K zone, and we've been rejecting off it quite a bit since the start of May. So basically a month and a half of rejecting the 10K zone. As we can see, a lot of sell pressure within this range, but we also do have a series of higher lows squeezing the price towards some level of an apex, which is going to be obviously where you have a horizontal level of resistance in an ascending zone. There's going to be some level of intersection where the price has to make a choice, and that's going to be the point where we're going to have some move. It's going to be pretty volatile, and we're going to try to capture some profits at that area. But in terms of the current price action, that was a massive, massive recovery from the buyers with lots of volume coming in. Not too much sell pressure on the second attempt to move to the downside. And then this candle was kind of the make it or break it. So we'll jump into the smaller time frames. On the 4-hour, we do have a pullback validating the previous support as a new level of resistance. The story is a little bit different on the smaller time frames, but the daily definitely signifies that there is a lot of buyers to pick it right back up. It makes sense because the overall equity market recovered. We turned from a risk off potential sentiment into a neutral. We got to be careful. We don't want to jump to conclusions too quick type of environment where, it does look like it could start to fall off, where the S&P's right at that key level of support. If the S&P, if Russell 2000 does fall off a cliff, equities will definitely drag crypto along with it, including BTC definitely. So I think that if equities fall, crypto will fall as well. So take that into account. But in terms of the recovery, not looking too bad. Definitely more sell pressure than buy pressure. I'd be a little bit hesitant. We do have this potential ascending zone that will create some level of confluence if the price does move up a little bit higher, but I would be a little bit hesitant on just saying that this is a massive recovery and that we should long. It's just going deeper into our squeeze, and if we just close this, and close this, and use that trend line that we have on the daily chart, which is right here. And you got some candle closures even on the 1-hour, and then you got the final touch right there. Let's just make it green. That is not green. And then we get our nice projection indicating by zone, not just a single point within the chart. And then we just go like this. And there we go. We got our nice little zone of ascending support, which is indicating buy pressure within the market. So overall, we're getting a squeeze within the structure. And that's basically my analysis for BTC. Gonna get a little bit of coffee. And then the 1-hour, not a whole lot, to be honest. Quite a bit of sell pressure. We got a huge recovery with this big wick to the downside. We made a higher low and we just absolutely rocketed up to our new level of resistance, which we're currently holding right now. And I think we could raise that up a little bit like here. And that's going to be the new zone that we're going to be looking at. And then this is that key level. Let's just make that a little bit bigger. And I think we could draw in a potential break, but I'm not really going to even use that as of right now. So I think the best thing to do at this point is just stick with the daily, stick with the 4-hour, because at this point, in my opinion, it's kind of in a no trade zone. We want to see what the equities market is doing because that's going to be the leader in a lot of the moves that's going to be happening. Not the exact leader, but a lot of it's connected. Crypto is not just this random asset that is not correlated with anything else. There's a lot of correlation between the assets that we're looking at in FX and equities and oil and crypto. A lot of them come together to create relationships, create, if you pull one thing, another lever goes, and it is really all interconnected. So we have to understand the broader market, the broader sentiment, the broader direction in which global investors are looking to trade, either to the upside in a risk on sentiment or to the downside in a risk off sentiment. So we really have to understand that before we jump into the trades. And right now, I think the best thing to do is just be patient, try to understand what the S&P is doing. If it's really going to break below this major level of support, that's going to be the key zone that I'd like to see break in order for me to really shift my bias and hammer on some risk off exposure. So that's the overall market update. I will close the recording, but like always, I'll go over all the questions at the end of the video. Thank you very much for watching. If you found this useful, entertaining, informational, whatever it may be, it'd be great if you would subscribe to our channel. It means a lot, and then you'll get more videos like this one. We do try to bring you some overall good content for understanding the broader market. I don't think that there's that many people who actually analyze this many assets. Like, we look at oil, gold, silver, bonds, different indexes and equities. We look at FX, we look at crypto, and we don't trade in all markets. I don't trade oil. I don't trade the S&P really at this point. I don't trade bonds, but I still look at them because they are relevant to the overall landscape of the global investor, in my personal opinion. And you can use these different tools in order to gauge the level of risk on or risk off sentiment, or the aggression of the buyers and sellers within the global landscape. I think that's why it's useful. You can call it a more in-depth analysis compared to just opening up a chart. Like, let's say you just open up Bitcoin, you have no idea about any other assets. This is not going to be as dependable structures or dependable trades. You're not going to be able to understand the larger macro pattern, in my opinion, unless you're able to understand the larger scope of things. So, all right, that's going to be the end of the video. Thank you very much for watching. Like I said, I will go over questions at the end, and hopefully you have a great trading week. Thank you again for coming, and until next time, have a good one.